So my account had another good day. It's kind of strange because at the beginning of the day, I'm down like $300, and then somehow I end up being positive $300. And my returns so far for this year are really well. And my question is starting to be like, is this sustainable? Can I actually maintain this return? What does it look like when I lose? Because I haven't had any really big losses yet in the futures market right now. Everything has been really working for me. So that's kind of what's going on with my account right now. I'm seeing really good growth, really good returns. On the other side of it, I don't know what a bad day looks like yet. Let's go over my trades and see exactly what happened today. So I didn't get a chance to take a screenshot on my computer. I took some screenshots on my phone, so it does look a little bit different, but this is my cash account, $100. That's not going to change much. And then I have my margin account here, which is $19,302. I made $215 on the day today. Like I said, it started out red, and we ended up in the green, $200. And these are my positions so far. You can see the soy is missing. That was actually up $250 on the day today. So that position closed. We'll go into more details on that. But this is my current position. You know, Tesla is at negative 179. I opened up my position on wheat, which we'll get into, and my bonds. Corn jumped up today, $253. And then pretty steady on copper. And then we have the E-mini S&P 500 down $35 on my account. All right, let's go over my trades today. We can see I did my regular 30-20-10 strategy, 30 days to expiration, 20 delta put spread, $10 wide. I've been collecting $75 a day with that, not including the commissions. I did a 51.70 and 51.60 there. And so regular trade. And then here we have my soybean position that closed. And at first my soybean and corn was down. And then out of nowhere, the prices went up today. And I was able to close my position on soybeans. So with the freed up cash that I had, I decided I had to make a decision between reopening a position on soybeans or trying something new, doing wheat. So I looked at wheat and I decided to just go ahead and open up a new position on there just because I haven't done wheat before. So we only have about 9 more trading days until we're filled up here on this 30-20-10 strategy. So each one of these dots is a put spread, and I'm just putting the spread on at 30 days and then just letting them go all the way to 0 days and then collecting the premium. So far it's been working really well. Take a look at my positions there on them, and you can see it's just a big chain. 32 days is where we're at now, and then I have all the way down to 14 days right now. So just chugging along with that. You can see that the prices overall are decreasing as time goes on, and that's exactly what I want to see. And the stock market is continuing to go up, or at least stay steady, so I'm not having any issues in this area. You can see that my open positions right now, I'm at 471. So things are looking good overall in this strategy. I like what I see so far. It's very easy and mechanical. There's not a whole lot of thought that goes into it. I think where this is going to get tricky though is when it's time to close a position, deciding whether or not I want to let it go into expiration, because these are European style options. The only time that you're able to execute these options is after expiration. So I really am kind of debating whether or not I want to hold the position into expiration or just close the position where it's at 0 days. So I'm kind of debating that right now. I've got about 9 days to decide, so I'm not really pressing on it right now. So that's where I'm at with that. Corn really surprised me today. I was down nearly $100 on corn, and then the price jumped up. And you can see here, I'm at almost $130 here since I opened the position just 3 days ago. So if we look at the chart, you can see it shot up big time this morning, and it stayed there all day. That's on the 5-minute chart there. And if we look at the daily chart, we see a strong push up on good volume. And so that totally changed the game up here with corn. I think we've probably have seen a bottom here on corn. So that's good to see. I think I'll probably be out of the position if the price stays where it's at. Hopefully Monday. We'll just keep an eye on it and see. So soybean looks a little bit different. I was up on the position, and then as the price went down, I was thinking I was going to be in trouble because there really wasn't any support below this level. So it already broke through the support line, and I just thought we were going to continue to see a downward momentum after this. But actually, it got bought back up, and it made this hammer. Really good to see. And then it ended up closing the position at 50% profit. I was really surprised to see that happen so fast. I think I had the trade on for around 7 days, And so I've already got 50% profit out of that. That was $250 in a week's time. Really great to see. And I believe corn is in the same direction there as soybeans. So wheat, let's take a look at the wheat position. We can see the same thing here. Strength going up. So I think if it stays in this level here, it's not going to take long before we can collect profit on wheat as well. So I opened my position. You can see the 20 delta here, and I opened the position here at around 525 on the put side. And we're at 650 on the call side. Again, 20 deltas here, 20 delta strangle. And I decided to go with the 57 days to expiration. So 57 days is further than I want to be, but it's the closest to 45 days that I have for wheat. So I decided to just go ahead and go with the 57 days and play it out and see what happens. And we can see with copper here, it is staying steady around this range. And I'm hoping that it just stays and does just that. You know, it stays in this range. It doesn't get too crazy. I don't want the volatility to keep going up. I want that IVR to continue to go down so it contracts on the expected move. We can continue to have those option prices go down. So taking a look at Tesla, we can see here that it's still trading within this range, and we're actually seeing a channel going up. So it does have to fight through some of these moving averages. We can see it's still holding that 8 EMA moving average. And the general trend here is up. So unless we have some bad news or something like that, we could still see downward moves here. But in the meantime, we are seeing in general a channel forming where the prices are going up. So that is good to see. That does give me some hope. We'll see what happens next week. I think we'll get some more answers next week on what the direction is on Tesla for the short term. My goal, what I'm wanting to see out of this, is for it to push up to $200, because there I think I can make my 50% profit and get out of the position. So you can see here, I rolled one of my positions. It's the 180 put spread. And so I rolled that in time and I collected about $54 in premium. It was around 22 days to expiration. Tomorrow would have been 21 days. So I just went ahead and managed that position, collecting whatever credit I could. So far, we've been doing really well in the 50% challenge. We'll go over the weekly update tomorrow, so expect a video on that. But overall, really great week, really good day today, and I'm not really sure what a bad day looks like yet in the futures market. So that kind of is looming over me, and I'm kind of just wondering when that's going to happen. Really, it's just a matter of time, right? We're playing a probabilities game, and the trades that I'm making are 70% profitability. And at some point I'm going to lose. And the question is, how much?